So I just wanted to go through my fundamental analysis for crypto strategy briefly. I'm not entirely I'm just starting this out. I just feel like it's more important to focus on the fundamentals of a crypto coin, especially if I'm going to be holding it for 2 to 3 months rather than just focusing on support and resistance and like liquidity sweeps and market patterns, technical analysis. So the first, there are six equations. I had ChatGPT, or I had Grok AI summarize these, but the six equations that I'm going to be using for the fundamental analysis. So the first one is network value to transactions ratio. That is the market cap over the daily transaction value volume. So how much of it is being traded per day and how much of it there actually is. So what that means is if it's higher, and whether it's high or low, I don't know exactly what the number is, but I believe it's like 30 to 50%. The higher, or probably not that high, but the higher it is, the more liquid it is, and the more likely that the coin has like po positive potential. But the lower it is, usually means that the coin is kind of dying out, or something about the blockchain or the fundamentals of the coin are not good. So this is probably, or I guess if it's divided, you want this to be as low as possible. Um, High NVT overvalued, low NVT undervalued. Metcalfe's law valuation net value scales with the square of network participants. So it's just network value, and then it's just active users squared. And I think what that is, or what it is essentially however many people there are that many sort of connections or that many ways that crypto could be transacted. Like if there are more people in a room, there are more handshakes that could between people that could occur. The same thing applies for cryptocurrency, where the more people there are, the more transactions that there can be. So this needs to be higher as like the proxy for users. Good for spotting disconnects between price and adoption. Third one, stock to flow model, popular for Bitcoin, scarcity driven. So essentially, total supply over new annual supply, how much is getting added per year. And um, I guess here it says works well around having events. Um, Swing traders use S2F deviations to bet on mean revision. So essentially, I believe the more that are being added in, that means that there's more growth there. The market cap's going to increase, or they predict that the market cap's going to increase. That's why they're adding more coins to the circulating supply, which would which is going to lower the value of the coin, but it's like inflation that usually generally means that's a good sign for the coin. For the S2F to be relatively low, which again is total supply versus new annual supply. The fourth one is velocity of money model, MV equals PQ. So adapts macroeconomics to crypto tokens. So M is how many there are. V is velocity, how fast coins circulate. P is the price, and Q is economic activity in transactions. So I think here is just another one. This is like probably the best equation that there is. Like one of the best out of the six that I'll be looking at for figuring out what coins to buy, because it just sort of summarizes it as the market cap in M times P, velocity and economic activity in transactions are all they're all like listed on there, so I think that's probably going to be my best bet. If velocity slows, more staking and holding, that means price rises. So, when velocity is slower, it looks like people are trying to get it off their hands, but if velocity speeds up, people are trying to get the coins off their hands, and if velocity slows, people are investing it, staking the coins, and trying to make more of it because they believe in the fundamentals of the coin. Momentum-based swing equation. Practical for trading, not valuation. I don't know how much I'm going to be using this to be honest. Expected move equals A delta volume plus the beta plus the delta on open interest. I don't know. I don't even know what that is. Times the funding rate deviation. That is used by swing traders in futures and different markets. So that I'm probably not going to be using as much, to be honest. That's more technical analysis than fundamental analysis. And I already know technical analysis. I just work with the charts. Um, Lastly, crypto is I don't even know what this is, but it's reflexive money. Money flowing in and out dictates price. Okay, that makes sense. Obviously, the delta in price equals like if there's more money coming in, obviously that means that people are going to be if there's more money coming in but not a lot of transactions, that means that net whales accumulating, large shareholders are trying to get more, and it says here swing traders track USDT, USDC, insurance, and exchange net flows to anticipate moves. So here, I guess it's just looking at how much the large shareholders of the whales are accumulating, how much they are accumulating without like transacting and stuff. And so I think that that will work well because that just sort of that one in particular just shows that people are rich people are trying to get a lot more of the coin because they know it's a good place to store their money. And so if they are, then chances are they're going to drive the price up and I should put my money in there as well. So those are the six equations I'll be working with. I probably will revise it, so I'm not going to be working with only those six and I won't be working with all of those six. So far my strategy is pretty simple. Put every coin, Sui, Polygon, um, Solana, Ethereum, and Bitcoin through those and see which one's the most viable right now. Then go onto the chart, find an op entry, buy, and then sell within a month or two when I reach whatever previous area of liquidity or like target percentage. That's my strategy so far. Thank you for watching.